what they're doing is Bitcoin lending, and a lot of it is for houses. People have huge amounts of Bitcoin on their balance sheets, and they want to go buy a nice house, and so they just borrow against the Bitcoin. So we're seeing it being used as collateral significantly already in the kind of DeFi or CeFi sector. But we've already seen MicroStrategies borrow, I think, from JP Morgan or lend to JP Morgan. So it's showing that at the banking system level, as you're saying, we're starting to see the early signs of this is a collateralized product, and therefore, the demand can go up significantly because it's not dead money.
Bitcoin has surpassed $66,000, reigniting optimism and forecasts of a potential breakout. However, it still faces psychological barriers and regulatory challenges that must be addressed for broader business adoption. Mark Hart and Raoul highlight the importance of considering 6 key asset characteristics to understand Bitcoin's value as global adoption grows. Increased accessibility is driving price fluctuations, fueled by heightened awareness. Hart emphasizes Bitcoin's superior security compared to traditional assets like the US dollar, pointing out that holding dollars incurs a hidden tax through inflation and reduced productivity gains. In contrast, Bitcoin's inflation rate hovers around 1%, showcasing its stability. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. Enjoy the video.
I wouldn't say that I'm religious about Bitcoin per se. I do think it's has the potential, and Bitcoin related, to be extraordinarily, disruptive to the sort of incumbent financial system. And I think that's why you get sort of the, shrieking attacks on it as an incumbent is sort of under threat. But I guess to me, and I've talked about this, I think, on here, it's like trying to understand sort of the value of Bitcoin or a value of, any kind of asset, what makes it, what gives it value. 6 characteristics that I've outlined before that kind of define the value of any asset. Where I think we are now is as Bitcoin is kind of continuing to be adopted, there are a couple of those areas, like if you think about it, to cut back, so access, how easy is it to access something? And I think that, as Bitcoin is spreading globally, that access is improving, maybe relative to other currencies, other stores of value, et cetera, et cetera. Awareness is continuing to improve, and it's always changes in the 6 factors that will drive the price. Security, obviously, Bitcoin security at this point can be pretty well perfected. One of the problems, with alternate assets like the dollar, is in fact a lack of security. It doesn't mean that there's no value in dollars, or there won't continue to be value in dollars for a long time, but there's a tax on dollars. I pointed out that I think that tax is the sum of sort of productivity gains and inflation. So that's sort of your bogey that you have to hit, or that's the tax on holding a dollar. So and I'll walk through a little explanation I like to give. If you have a basket of goods that are $100 at the beginning of the year, 102 at the end of the year, then you've had kind of 2%, CPI inflation. But if productivity gains, non-farm productivity, had been, say, 2% over the year, then that basket theoretically would have been worth $98 at the end of the year. And so it's that delta is sort of the tax that holders of dollars are paying right now. With Bitcoin, I guess it's a little over 1% inflation and supply. And so, that security seems to be, much better for Bitcoin. And looking forward with, expected significant deficits and debt to continue to be run up in the developed world, you would expect a monetary policy monetary policies that would facilitate that debt growth. And that's the world we've been, living in for a long time. But I think that from Bitcoin's perspective, and, gold and other types of fixed supply assets do particularly well, kind of in that environment. Patina is just simply the gloss, the feeling maybe that you get by
status almost
status, right? And it could be, there are different reasons to hold, kind of different assets. Maybe Tesla has been overvalued for a long time because of the personality and the image that Elon Musk puts out. And I think, Bitcoin has some of that, return on investment. There's not actually there can be a return on Bitcoin. Typically you think of Bitcoin as you're holding it in your wallet and it just sits there and inflates, or you hold it in an ETF and there's a small negative carry holding that, but it benefits. I think that one thing that's interesting though on, return on investment is that, Bitcoin, like on the balance sheet of a corporation or in the hands of a more sophisticated player, is actually worth a lot more than a Bitcoin in an exchange.
Mark Hart further explains that companies holding Bitcoin on their balance sheets can trade at a premium, creating unique opportunities. The conversation delves into how Bitcoin's volatility enables strategies such as selling options and monetizing price fluctuations. Hart notes that corporations can also leverage their Bitcoin holdings by lending it out or issuing convertible bonds that have the potential to convert into stock while earning interest. Hart and Raoul address significant obstacles to broader corporate adoption. He points out that current accounting rules discourage companies by allowing the reporting of losses but not gains. Additionally, psychological and regulatory challenges hinder progress. However, Hart suggests that changing accounting methods to allow businesses to mark positions to market could enhance adoption. The discussion highlights Bitcoin's value as collateral, which Hart identifies as a key factor for companies to benefit from price gains by converting bonds to equity, thereby eliminating debt. Powell adds that investors use delta hedges to effectively manage downside risk. Despite these hurdles, both agree that the potential for increased corporate adoption remains promising. For further insights, check out more interview clips featuring Raoul and Mark Hart.
There are companies out there that buy Bitcoin and they hold it on balance sheet. Universally, those companies sort of trade at a premium to the Bitcoin on their balance sheet. So and of course the volatility of those companies is through the roof. So there are opportunities to do, all kinds of things, whether it's if you have a constant strategy of acquiring Bitcoin, you can, sell puts and acquire more as it comes into you, or you can monetize that volatility. There's a correlation, obviously, between interest rate and volatility, and the higher the vol, the higher demand for return. So corporations can either use their Bitcoin and lend it out.
What is the trade that they're doing that's absorbing billions and billions of dollars of this?
I guess like a convertible bond has it's basically two components to it. One is a bond that invest and you get a rate of return and interest. And then there's also this component of optionality, which is you basically have a bond and an option. And the option is, to convert that bond into equity at another price. So because of very high volatility of Bitcoin and a high volatility of companies that hold, the stock prices of companies that hold, Bitcoin on balance sheet leads to very high realized vol. And so the value of that option component of the convert in a much higher volatility environment is worth much more. So the play on of course, the company side is a company is, you own Bitcoin and Bitcoin goes, number go up and your stock price goes up and, eventually those bonds are converted into equity. They're no longer a liability, but, you've kind of sold that option at a Bitcoin price equivalent, Bitcoin per share price equivalent at a massive premium to the actual price of Bitcoin. You take the proceeds, you turn around and you buy, Bitcoin and you rinse and repeat. From the ARB's perspective, they can get a steady return with this gigantic call option. And that, and what they would do is they would buy the convert and then they would delta hedge their position, short out the stock, buy the convert to some extent. But the possibility is, of course, that you get you have your downside protected. It's almost mystifying that there hasn't been, much more corporate adoption of Bitcoin on balance sheet. And I think part of it has to do probably with the way it's accounted for, where you don't recognize gains in the price of Bitcoin on your balance sheet as earnings, but you do recognize losses. That accounting treatment, I believe, is going to be changing at the end of the year. People have the ability to mark their positions in the market. I think that'll be a change. But I think that generally speaking, the psychology, it's kind of tough to go as a CFO of a company or a CEO of a company and do something that's so out of the kind of mainstream. And if you fail, you want to fail together, or most people do. And right now, you're kind of on an island if you're out there, pursuing that strategy. And there are probably a lot of other kind of hidden forces that are, also discouraging corporations from, holding Bitcoin on balance sheet. I mean, the math for a bank, they can't custody a Bitcoin. It eats up their capital for doing it for kind of no return. And that's actually kind of what I was getting at, is the number 6, factor that gives value to any asset is used as collateral.
In other news, October is typically a strong month for Bitcoin, and the asset's recovery from $59,000 on October 10th has shifted commentators' perspectives. Dan Tapiero, founder of 10T Holdings, believes Bitcoin will reach new heights once it regains price levels not seen in 4 months. He notes that Bitcoin's price is coiling, suggesting a tightening action that often precedes a breakout. Tapiero is optimistic about Bitcoin's ability to reclaim lost ground. Jella, a pseudonymous trader, shares this sentiment, predicting an end to Bitcoin's lengthy consolidation. Since April 20th, Bitcoin has been trading within the $58,000 to $72,000 range. Jella emphasizes the formation of 2 higher lows and a higher high, indicating that prices are pushing for new peaks, claiming the summer lull is behind us. Cryptocurrency trader Matthew Hyland adds that Bitcoin's 10-day simple moving average is on the rise, and historically, when the 10-day SMA increases, Bitcoin's price follows suit 80 to 90% of the time. This technical indicator reflects rising optimism. The current upward trend has sparked speculation about a potential breakout, with traders closely watching the $70,000 level. Tapiero forecasts a significant move once this barrier is crossed, stating, "Break $70,000, and hell will be let loose." Jella echoes this, emphasizing the positive momentum, while Hyland notes that a rising 10-day SMA has typically preceded price gains. Together, Tapiero, Jella, and Hyland provide valuable insights into Bitcoin's market dynamic. What do you think is the main barrier to widespread corporate adoption of Bitcoin, and how can companies overcome it to seize the opportunities presented by this digital asset? Please share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.